Welcome. I'm Rachel Ivanovich in for Catherine Magana today. I'm here with Steve Wolf, Vince Stefano, and Greg Carroll, and we're here to talk about the markets, financial planning, and tax planning. So, Greg, what's going on in the markets?
Well, a quick update on the markets over the past week and year to date. The S&P is up 1.22% year to date. Through this morning. Well, it's after the market started, so just a couple hours ago.
And today is January 29th.
January 29th, yes, thank you.
Right at the end of the month.
Over the last week, we've inched up about 0.25%. The NASDAQ is similar. It's up just over 1% year to date and about 0.25% in the last week. The Russell 2000, which came out of the gates on fire,
which is a small stock index.
Small stock index is up almost 5.5%. And that's including a 3% drop just in the last week. So the Russell's still really doing well, but maybe it's coming back to the bigger counterparts here. The 10-year Treasury is trading at 4.16 at the beginning of the year. It's up to 4.25% now, or 4.24. What's interesting is the Fed lowered rates back in September, October, and December last year. And the 10-year bottomed just under 4% back then in the fall. And since those rate decreases on the Fed, the 10-year has obviously climbed up, to 4.25%. It's been trending up since that rate decreasing cycle. So if the Fed continues to lower rates this year, it'll be interesting to see if the 10-year kind of keeps fighting that trend a little bit. So,
do you have any idea why that's happening, or any?
I think it's because of all the debt that we have in the U.S. The bond market is telling us that maybe rates don't need to go much lower, but there's reasons that you can argue for it, and that's probably because unemployment numbers are softening a bit. Hiring numbers are down. Unemployment's only up a little bit. I mean, we're still historically very low at a little over 4%, 4.4, I think. But if that trend continues, there'll be more to be concerned about. Something to keep an eye on.
I think that debt is also what is worldwide is causing gold to continue to climb and climb and climb, because a lot of investors these days don't think that that these countries will remain solvent. Not that the U.S. is going broke, but we've got so much debt right now. We continue on that path, and at some point you could go broke.
Yeah, as our debt climbs, our dollar's been going down, and usually in a declining dollar environment, the precious metals tend to do pretty well, which they've done.
Politicians seem to be tone deaf, though. We're spending too much money, and all they do is continue to spend more and more and more. No one thinks about cutting. It's amazing to me. You would never do that with your household budget, never.
Well, that's because it's your money. It's not other people's money like the politicians play with, so they don't have to worry.
Well, I think the current administration has done some good things to cut a lot of the wasteful spending out. Billions of dollars. They've decreased the government employment payroll by like 270,000 jobs. So they're going in the right direction, but obviously there's a lot more to do to.
Well, the debt's at what, 39 trillion?
39 trillion
or something like that. So it's going to take an awful lot of cutting to pare that down.
And a lot of the expenses are on autopilot.
Yeah.
They're not cuttable, if you will. And I refer to things like Social Security and Medicare, and Medicare is going up and up and up, and by astronomical amounts, and it's understandable because of the costs.
Yeah.
And when you're promising that to so many people, it's tough to get that. I don't know if cryptocurrency is acting in the same way, because I see where Bitcoin this year and for the last few months has been going down.
It's getting shellacked today.
It is
down by like 5.5%.
So obviously then there's that correlation is not there. For a while, people were saying that that's a store of value. And you would think if, like, gold is supposedly a store of value. So you'd think if crypto was a store of value, then Bitcoin would be going up at this point, but it's not.
Yeah, I think, central banks around the world have been purchasing a lot of gold over the last 3-4 years. and decreasing their holdings in U.S. Treasuries. So there's a lot of demand for gold, and there was a lot of talk, like you said, about cryptocurrency being in these central banks, but that I don't think ever really has taken hold yet. So
maybe someday it will.
Maybe.
I mean, I don't know how long it took before we got off the bartering system to have, coins and then paper money. I'm sure it didn't happen overnight. So, maybe not in my lifetime, but at some point we may be trading in cryptocurrencies.
I don't, that could very well be. But, a lot of guys are using crypto, as a non-correlated asset class to, the S&P, the Russell 2000. And unfortunately, when you start seeing the markets take a hit like they are today, these hedge funds and macro funds start selling everything under the sun.
Right.
And so you're probably seeing crypto taking a little bit of a hit because of that.
If they're not correlated, then why are they going down when the markets are going down?
Because when you start losing money in one major asset class like stocks, like stocks are getting hit today. And the hedge funds, they report their returns, their net returns at the end of each month. So they're looking at this month, and they're going to have to report to investors. And if they're getting whacked both on the equity side and the crypto side, they got to figure out, I got to sell everything quickly because I want to show some kind of maybe pot. And you were saying that year to date, the S&P is only up, 1%?
Yep.
Well, I'm going to guarantee you that a lot of hedge funds are probably close to that or, give or take 20 basis points. So, they're trying to protect their...
We can't really guarantee anything. Not on this podcast. Sorry.
No. But what I'm saying, they're trying to protect their assets, and when they report their net returns to investors this month, they're going to try to, show something decent.
I think that crypto has actually been very uncorrelated because over the past 12 months, when the market goes up, crypto's been going down. Now the market's going down and crypto's going down harder. So I don't know if they're necessarily correlated anymore at this point. It may change because it used to be, when risk on, crypto was going up. And when risk was off, it went down. But now it's kind of opposite.
So we don't know if there is any correlation.
Right. It's uncorrelated at this point is what I'd say.
I'm just saying it's more of a speculative trading vehicle for a lot of hedge funds that are out in the investment world.
So the market, especially the tech stocks in particular, especially the software stocks, are getting annihilated this morning. And, it's interesting because I went to my new best friend, ChatGPT, and said, what are some of the concerns in the financial world today? And the first thing they came up with was tech, AI sector risks, and profitability concerns. And maybe, Vince, you can talk a little bit about that.
Well, if you look at what's happened, 3 of the Mag 7 stocks reported last night, and all 3 of them beat revenue and earnings consensus. However, only one of those Mag 7 stocks are actually up today. And reason is that, this street, like you said, they're worried about expenditures and I've been saying this for a long time, the big question mark with a lot of these mega cap tech stocks is when do they get a return on their investment? Today I think the market is, it overshoots on the upside and the downside. And I think it's overshooting a bit on the downside. And one of the, major, Mag 7 stocks, is taking the whole software sector down today. Now, the question is, how do you look at that and say, okay, what do we do from here? I think, it's still very early in the AI life cycle. I've been saying it all along. It's going to take until the second half of this year on into the next year, for a lot of these companies to monetize their AI investment. So I think from an investment standpoint, you have to look at the sector and look at software sector because I said a couple of weeks ago that could be the next value opportunity in the marketplace. And there are a number of
or it could be a value trap.
It could be, but look, gold was a value trap for 10 years until this year. So, anything can happen in the marketplace. Things change so quickly, and investor psychology changes very quickly. All I'm saying is when you look, and I'm going to use the Stefano 3-day rule. And
I think I saw that in the Wall Street Journal.
well, it's being quoted a lot on CNBC. But on days like today, certain sectors, the market gets hit hard. The shorts are dancing naked in the street. Everybody's, all the short sellers are happy. But you take a look at today, take a look at what's happening in trading tomorrow, and see if you see some buying or maybe you see some more short covering. And then take a look at Monday and see what happens on Monday. And if you start seeing some of these stocks start to settle or the charts start to look halfway decent over a couple, 3 days, find some really good companies, and I'm going to add to my position. What I will do then is set maybe a 10 to 15% stop loss, and if the market and these stocks continue to break, then I'll sell the entire position. But this could be an absolute phenomenal buying opportunity for some of these companies. And I think you're going to see consolidation in the space because finally current valuations, I think, are not reflecting what future earnings potential can be.
In what way?
I think that the valuations were quite high. I think that they needed to pull back a little bit because, again, all of this expenditure is coming out of revenue and margins, and they're not monetizing it. So let's see what happens over the course of the next 6 to 9 months. And I think there are a lot of great companies that are getting absolutely trashed today. And you could look back and say, hey, these could be very, very good buys. So, I'm not sitting there just hitting the automatic sell button today. I want to find some really good companies and maybe add to my position.
So basically what you're saying is the stocks have been overvalued.
They were overvalued. They're now coming down, and the valuations are looking a lot better.
Right. The question, though, is, are they reasonable? And that's what investors are worried about. The Mag 7 that you talked about, Magnificent 7 stocks represent a huge portion of the S&P and the NASDAQ. So when those stocks go down, the indices go down a lot, just like they went up a lot. So this really becomes more of a stock picker's market, I think, than just buying an index. Because again, just like you said, and we've been talking about that the valuations have been rich in a lot of these companies. They're spending money like crazy, and it's like a race to see who can spend more, and they have to because of competition. But how long will it take to monetize that? It may be, as you say, the end of this year.
I think it's the second half of this year.
It could be 3 or 4 years from now. Who knows? We don't know that.
I don't know. But what you're hearing from the companies, they're thinking the second half of 2026 and on into 2027, you'll start seeing more monetization of the AI investment. So,
right. In the meantime, though, how low do they go? And as you have said before, if you had huge gains, probably should take some off the table, or you should have. Maybe it might be too late after today.
It depends on when you bought them, what kind of gains you have. Even some of the stocks that are getting heavily trashed today in my portfolio, I still have some very sizable gains in these names because I bought them at a very good price.
I personally have some concerns about the software as a service business because I think the AI business in general can do what these companies are doing for a lot less.
And, it's interesting. Your comments are well taken. They were talking about that, and a lot of analysts have come out and said these companies that are in the software as a service are now starting to go out and acquire a number of AI companies. And I've been saying this all along. You're going to see these companies.
You've been quoting yourself a lot today.
Well, I've been saying this a lot. And days like today, it kind of comes, the chickens kind of come to roost a little bit because, their stocks are going to hit. But I've been saying all along that, these bigger companies are going to start acquiring these more innovative, smaller AI companies because it's better to buy than build. And if you want your enterprise platform to be incredibly competitive in the marketplace, that's what you're going to see happen. So I think that there could be good opportunities in the software sector. I think there could be a lot of interesting opportunities, not only in the software sector alone, but look into the healthcare sector that has a lot of AI components, but any major technology company has software. So you have to understand that even in the healthcare area today, a lot of AI-driven companies are getting hit pretty hard because they're throwing everything out. What is it, the baby with the bathwater?
I think, we talk a lot about AI. Everybody talks about it. CNBC talks about it. But there's a whole lot more going on than just AI stocks to be, looking at valuations and so forth. And a lot of our clients have diversified portfolios. I think one of the things that we got to keep in mind is we need to broaden out. There's international companies, there's emerging market companies.
But you
there's
have
small
international AI companies too.
Well,
so
yeah.
you need to diversify.
Right, but not the Mag 7.
Right.
That seems that there's so much attention placed on that. And
Well,
I think only one of them beat the S&P 500 all of last year.
But you look at what you just said about international AI. Most of these major technology companies have a huge revenue stream that flows from international. So you can
Right.
look at that and say, oh, this is a multinational.
But there's other
company.
companies besides just AI-dominated companies that derive their revenue from around the world.
I understand
there's whole industries that are outside of AI, and there's a lot of ways to make money, and they've been ignored. And you're seeing it, with the small companies coming up last year. The Russell 2000, did very well comparatively. The international indexes.
I think because of AI, there are other companies that can do very well. I mean, I've said this from the very beginning. I'm going to quote me. I've said this from the very beginning that medical companies, the medicines, the pharmaceuticals, whatever it might be, should be very well taken care of and advantaged by AI.
Yeah.
Because it's so much faster now to go through trials. It used to take 10, 12 years. You can now do it in a year.
Yeah.
So I think that rather, I'm not saying that you shouldn't have the AI companies because they're going to continue to do extremely well, I think, my opinion. When I say AI, technology companies in general based on what's happening. But I think that the usage for AI is going to come into play in many other sectors. I mean, you can take it into the industrial sector.
Well, yeah, you have to use AI in this day and age in all aspects of your business. I mean, from, paperwork to callers to, admin. I mean, a lot of lower level white collar jobs are going to be eliminated because of AI.
Just today, I was looking for some preferred stocks. In the old days, I would have to go to some paper library or something to find out all about these stocks to try. Well, today I just went on ChatGPT and I found what I was looking for.
Yeah.
In a matter of probably 30 minutes, which ordinarily would have taken me in the old days a week.
Yeah.
So AI is helping many, many different industries become better. Mm. So it's not just, we're not just talking about, the Mag 7 companies.
Well, we kind of have been, but I mean, that's what I was hearing.
Well, I mean, look at the valuations on these. You're talking about the biggest companies in the world.
Right. And those biggest companies did extremely well, but they all underperformed last year. And so maybe, that's what I'm just saying. Broaden out from, the conversations of just the biggest, 10 companies on the planet, which are great to own, but that's not where all the returns are going to be necessarily in the next 12 months, 2 years, 5 years.
Nothing goes to the moon. Okay,
nothing goes to the moon.
Not in a straight line anyway.
Yeah.
Well, I think Catherine stresses it often, the importance of financial planning and why all of our clients do have financial plans, because everybody is different and everybody has different goals, risk tolerance, et cetera.
And we also talk about being diversified.
Correct.
Okay, that you don't want to put it all in one thing. Now, people will tell you if you want to really get rich, you concentrate in a very small portfolio. And there's truth to that, but there's also a lot of risk to that. So if you're not willing to take that risk, then you better not do that. And for most of our clients, we don't allow them to do that.
That's why you need the plan. You got to find out, what are those goals? What are you striving for? It's like, well, just make me money. How? What risk do you want to take?
Yeah, and what's important to you. And,
right.
Do
a plan, having a plan.
Well,
is the only
speaking
way
of
to get
CNN's Fear and Greed Index, We are at 59 this week, which is actually 5 points higher than where we were last week. And we've edged into the greed section, just barely. We're now into the greed section. But I'm wondering...
after today,
Yeah, that was before today.
That was before, yeah.
You're going to go back into neutral.
Well, maybe next week when we convene again, it'll be interesting to see where we're at. But right now it's at 59, and that is just at the edge of starting to get into the greed sector.
What's happening potentially this weekend that could affect that? Another government shutdown.
Oh, another government shutdown.
I think it's a partial one. I don't
the
believe
Senate
it's a full
voted
one.
already not to, further the bill to keep the government open, so they have to continue negotiating through today and tomorrow.
Oh, taxation
So
should be
that's
fun.
maybe causing some of the
That's got a
consternation
little,
in the market
there's a little
today.
angst there
so,
too.
yeah.
We've got some more carriers that are going into the Mediterranean, the Eastern Med. So who knows what's going to happen with Iran.
Might have to go thump
I think
Iran again.
That's one of the reasons I'm kind of looking at stocks that are in the defense area, especially the drone type stocks, because sooner or later we're going to fight all of our wars, if we fight at all, with drones.
Oh yeah,
It
100%.
won't be with people in the future. May not even be much now.
Did you see Top Gun? I think that was a line in Top Gun. Son, your days are numbered. He goes, we're going to be fighting these wars with drones and stuff. We don't need pilots like you. So
I didn't see that.
you should see it.
Great
It's one of
movie.
the greatest
See the
movies
movie.
of all
It's
Everyone
time.
says
Great
that Tom
movie.
Cruise and I are like identical twins.
Oh, absolutely.
I knew there was
Yeah,
something.
I knew. Yeah.
Something about
that. Yeah.
Well, I'm going to turn it to financial planning.
Okay.
And Catherine
Not
and I...
taxes?
Actually, no,
my
not
goodness.
not today. Is that a shocker? Well, yeah. Okay, so let's stay focused, Rachel. So we've had several clients call in recently, and their situation has been that they've lost a spouse. And this is always a very tumultuous time, clearly, and a sad, emotional. But the question is, what do I do with the IRA that I'm inheriting, or a Roth IRA that I'm inheriting? And so the Secure Act and the Secure 2.0 Act came out with very complicated rules and changed the rules that we had in place for years and years. And so talking with these clients, we basically let them know that there are a few key rules that they have to keep in mind when inheriting an IRA or a Roth IRA from a spouse. And one of those key rules with a traditional IRA is that if your deceased spouse had already been taking RMDs or required minimum distributions already, in the year of their death, you had to make sure that that was completed in the year that they passed away. And you have to take, as surviving spouse, the remainder of that RMD or all of it by December 31st. So then the other question is, well, do I open up my own account and roll the IRA into my own account, or do I open an inherited IRA and then move that money into the inherited IRA? And the rules for distribution are very different. So this is where the financial planning comes into play, and you want to make sure you know what their entire plan is, you know what their tax situation is.
It used to be so much more
It was
simple.
so
and
simple.
Now it is.
It's very
a rat's
convoluted.
nest. Yeah.
Absolutely. So this is specifically for if you're a spouse inheriting an IRA, because the rules for non-spouses are different.
Yeah.
So for these individuals that we talked to, the surviving spouse was younger, and so it makes a difference if you're older or younger when you inherit it. So for a younger surviving spouse, it makes more sense typically, and everybody's situation is different. So you want to make sure that you're consulting with advisors, but you can move the funds into your own IRA. And generally this is best when you're younger, because then you can postpone your RMDs or required minimums until you reach the applicable age, which it depends on the year you were born. Right now it's 73. Whereas with an inherited, if you open an inherited account and you move the funds into that, then you basically, the RMDs continue based on the life expectancy of your spouse. So you've got different rules. You definitely want to talk with a planner. If you as a surviving spouse are older, sometimes it's better to treat the IRA as inherited, because then you avoid higher RMDs later.
I think it's interesting how many people want to navigate this by themselves.
I know.
Who are not professionals doing this. There's just
tricky
too much
for us.
There is
Right.
just too much
Yeah.
of a complicated mess
Right.
to try to go this alone, which is, I know that's self-serving, but that's why you need to call us.
Yeah.
Because we can go through that and help you out. We've had clients make hundreds of $1,000 mistakes because they might not have known what to do, and they thought they did. So contact us.
Yeah, I had a client on the other end right below where you could take the money out. Actually, the client was over 59 and a half, so he could take money out of the IRA anytime with no penalties, just paying taxes. The wife was under 59, so we actually rolled the money into an inherited IRA
she
to
could
begin
take
with
it.
in case she needed to take
Yeah.
some out without a penalty, because you can do that under 59
If it's inherited.
if it's inherited.
But if it's your own account, then those,
Right.
yeah, you get hit with penalty.
So we didn't want to. So then we rolled it when she became 59. We rolled it into her IRA, so she's got all the flexibility of a normal IRA until her required begin
It's
date.
so complicated, and as Steve
Yeah.
said, don't try to navigate it alone
Yeah, you need to have a second set of eyes for sure,
or third.
I know.
or third.
And there's so
Steve's got 3 eyes, so he can just look at it.
Isn't there a three-eye blind? Isn't that
It's a band.
A band? Mm-hmm. Okay, and then there's a cyclops with one eye, so it all evens out.
There you go.
I have no idea what I'm talking about at this point. So how are we doing as far as anything more going on for this week?
Tax season kicked off on the 26th, so
It kicked off on the 26th, and you're
Woohoo!
not talking about taxes. I
No,
think
Oh,
that's
she
funny.
just did.
I just mentioned it.
All right. Well, that kind of takes care of whatever's going to happen for this week. We'll come back next week to see if that fear and greed index is still, in the greed category. So stay tuned. Until
3-day
then-
rule. Look at the 3-day rule.
Happy
The
investing.
new Stefano 3-day rule.
That's an old Stefano 3-day rule, but
He
it's
just told us about it
It's
today.
an old Stefano, and it's a 3-day rule.
There you go.
So anyway.
Break it
All right.
down.
Well, until this time next week, we'll see you. Happy investing, everybody.
Thank you.
Bye now.
Bye.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.